All right, so Apple earnings is coming up tomorrow. Here's the expected range for Apple earnings. A lot of times we get these big gaps, and essentially you could pre-calculate what the expected range is by taking the at-the-money calls and the at-the-money puts, and you add them together because they inflate as you get into earnings. The market makers inflate that premium because they don't want you to be able to buy a call and buy a put and make money off some big movement. So the IV goes up, the premiums get larger, and then you could basically add them together to get the expected range between now and Friday. And so here's what we're looking at, about a $13 range in either direction. So that puts a top value if we close tomorrow at the same price, around 339, at around 352, and a bottom value of range around 328. I'm curious to see what the community here thinks about Apple earnings, where you think it's going to open. Go ahead and post in the comments where you think it's going to open. It'll be a lot of fun to see what everybody thinks here. Now, here's what I'm thinking. We've got a couple of topping tails, a little bit of distribution happening up here. We still have decent momentum in the stock, and when I go to the Heikin Ashi chart, you can see we're still moving up. We still have some good bullish momentum. However, again, with earnings, the gap risk is really large. We also still have a MACD that's bullish. You can see it's been crossed the bulls here since the beginning of July. Interestingly, check this out. I show this a lot, but July, you can see it right here. July is the most bullish month of the year for Apple. Basically like 9 out of 10 or 18 out of the last 20 years, Apple has gone up in July. No surprise, this year we basically started to go up right here on the first trading day of July. And we even had a DOJI, which is one of my favorite strategies. Now, a lot of times people overcomplicate trading. In my world, you can trade these cycles really well using the Heikin Ashi chart. And you can even just trade something as silly and simple as the MACD crossing. Now, at Wall Street AO, we built this cool backtesting lab. I want to show you the results of this. And I know a lot of people think that trading needs to be so complicated with all these indicators. Look how silly and simple this is here with Apple. Basically, let me start from scratch. I'll show you what I'm doing here. I'm in my strategy builder. I'm going to go ahead and load up the MACD. That's essentially testing, buying when the MACD crosses to the bulls and selling when it crosses to the bears. Again, all we're doing is buying here. Let me move my little bobblehead. Buying when it crosses to the bulls, selling when it crosses to the bears, buying when it crosses to the bulls. Now, these trades generally last for about a month at a time. Sometimes you get double cycles like this one lasted for 2 months. But let's go ahead and see the results. Let's go ahead and check this out. Look at this. Now, your batting average is basically 50-50. But what makes this trade profitable is the risk reward at 2.3. The average gain is 8.2, while the average loss is only 3.5, which means your average gain is more than twice your average loss. And that means if you continue to work the system over and over and over again, you're going to make money. And if you use options with that, you can make a lot more money. Now, here's something very interesting I want to show you. Now, what we discovered through our strategy lab here is that the weekly MACD works also very well. And it's so simple. Again, I think a lot of people overcomplicate trading. They trade too many stocks. They trade too many indicators. They overtrade. Now, look at this. This is very interesting. All you need to do is buy when the weekly MACD crosses. Sell when it crosses the other way. You get these huge sweeping multi-month moves, but the most impressive part, check out the results when I come over here to our strategy lab. I'm going to change our test from daily to weekly. Look at these results, folks. The batting average jumps to 62%. That's actually pretty good from a swing trading standpoint. But what's impressive is the risk reward. 21% average gain, 5.4% average loss. Your risk reward goes up to 4. That means the winners are 4 times larger than the losing trades. And again, it generally lasts for a few months at a time. Very, very solid setup. Keep your eyes on this. You're going to love this if you start using it. Trading doesn't need to be complicated. It could be simple. Check out this chart with the MACD, and I'll see you in the next video.